All right. Evening, guys. How are we? Another Sunday evening, another live session. So, here to answer some questions. Interesting week with Bitcoin. Very, very interesting indeed. I know I've had a couple of people actually message me on that topic. So there will be maybe a little bit of content coming out for that specifically, but I'm sure that there will be people who have questions in that regard. I've tried to get Raylick to come along and actually have a conversation with us here. So he might be on a bit later on. Let me just double check because I messaged him earlier today and I don't believe he hadn't come back up to a couple of hours ago. But if he is on, then we might get him to come on and actually talk a little bit about the Bitcoin scenario at the moment, because that has been absolutely, I mean, this week has been crazy if you're holding Bitcoin. And it is very, very exciting because the possibility that there will be ETFs approved is absolutely huge, in my opinion. And look, I'm not kind of like a Bitcoin kind of like expert in any way, shape, or form, but I do believe that ultimately the approval of ETFs so that institutional money can come into this is one of the big, big steps moving forward. And it will take Bitcoin prices to a completely different level. I strongly, strongly believe that. So it's been a really exciting week. And, I don't know who actually holds Bitcoin here. Hopefully you guys do. What are your views? The talk of $100,000, that is well within reach if all of this stuff happens. I think I read on Twitter yesterday, there was a tweet on Twitter yesterday, and I screenshotted it because I was going to post it, but I just wanted to verify it, and I have not had time to do that today, that the Valkyrie ETF is actually already being approved or will be approved. So that is huge. There is a couple of nuances that are worthwhile discussing, though, because one of the options is not an ETF under the normal traditional definition of an ETF. It is more of a futures kind of like contract, which will allow institutions to buy Bitcoin at some point in the future based on a prediction on what the price is at that point in time. Fundamentally, it will still mean that you're going to have a huge inflow of money into cryptocurrency, into Bitcoin specifically. With the futures, it allows them to speculate a little bit more. So whether there's going to be a direct benefit in terms of their buying and holding, the crypto, that is yet to be seen. But it's still good news either way. But there are four on the way, so it's very, very exciting right now. And if anybody's holding Bitcoin, probably like me, you've been looking at this week thinking, "Oh my god!" But at 60,000 at the moment, I think it was today. Where are we at the moment? Let me just double check actually, because I've not checked it. I had a quick look this morning, and it was around about 60,000, something like that. So I don't know whether it's still teetering around there. You would hope that because of the news and because of the speculation of this actually coming through, you'll see that it will push through 61 tomorrow. So at the moment it's 59, so just under 60,000. But it's an exciting time. It really, really is. So, right, bear me 1 second, guys. I just need to do one thing. Bear me 1 second, and then we can get into some of the comments that are already here. Bear with me just 1 sec. All right, okay, cool. Right, so let's have a look at some of these. The comments are in here. Welcome, guys. By the way, thanks for joining. Mustang, I'm doing good, mate. Hope you're well. As a Rose, hey there, how you doing? Niam, good evening, Pete. And Mike is good. Hope all is well. I'm good. Evening, Marky. How you doing? Brian, how you doing? Andy, you're saying you may not stay for long. Hey, listen, the fact that you're here is great, and this will be saved anyway, so that people can actually have a look at it and view it, obviously after the fact as well. So all good. I'm watching this. I'm seeing the stream on the other side of the screen right here. I'm actually speaking to the guys at Restream who I use for this at the moment because I'm really not happy with the way this comes through in terms of the quality from what I can see. And let me know in the comments if this is true for you. What I can see for this right now is a pixelated picture. Although, for me, looking at this camera right now, I can actually see that it is crystal clear because I'm in full HD 1080p. But I can see it pixelated. Please let me know if you're seeing exactly the same because if this kind of persists, I might have to have a look at a different kind of software to actually stream from. It's getting a little bit problematic. I'm seeing it as well. So, all right. Yeah, thanks for asking this. Yeah, the week's been okay. The week's been busy. I got back from Dubai on what, Tuesday, late Monday? No, late Tuesday night. So yeah, I've been catching up with a lot of stuff this week, more than anything else. So it's been a busy week, and I'm kind of back to normal now, back into the normal kind of like routine and everything like that. I've had to do a little bit of work on channel analytics and so on and so forth. But yeah, I'm good otherwise. It's just been busy, which is great. I shouldn't complain about that. But I am kind of looking forward to the end of the year now, looking into next year, and I'm looking forward to some more time off over Christmas, basically, where I'm just going to be able to do nothing, well, close to nothing over 2.5 weeks, maybe 3 weeks over Christmas and New Year's. So yeah, I am back in the UK, mate. I got back last Tuesday, thankfully. So I had to do a little bit of work out there and try and get ahead of myself because I knew that I was going to be flying. So I did the video on Tuesday, obviously from Dubai, as you could probably see, wasn't in here. So kind of a little bit of a pre-work just to make sure that everything was in in order. I saw something about, oh my God, I'm going to come to this in a minute, actually. I'll come to that. Let's have a look at this one. I noticed the ADFEs for the Constraint riser share list, they usually go up. One second, I've got something open here. The following day, even if it's just a little, but in the breakouts list, the shares usually go down the next day. Um, what do you mean? Elaborate on that for me a little bit, Swift. Elaborate for me. What do you mean exactly? Yes, I mean, look. Oh my God, it is frustrating, isn't it? It is very, very frustrating, and I really don't know. I really don't know what's going to happen. Um, we've got a really tough set of matches coming up, haven't we? Liverpool, Atalanta, we've got City. If we play anything like we did yesterday, I do not see how we're going to. We could potentially lose every single one of those games, and it's shocking to actually say that. I don't know. I really don't know. I think the is there anything good that you could take from the match yesterday? Greenwood's goal, absolute screamer, brilliant. Rashford scoring on his return back into the team. Um, but that's probably the only positives that you can take from it. It feels as though they don't know what to do. They don't have any direction as a team, as a collection of players. So you got Ronaldo, you got big names in there. That's the thing. You got Ronaldo, you got Bruno Fernandes, you got Pogba, you've got Varane, you've got although Varane wasn't playing yesterday, you got Harry Maguire. I mean, Harry Maguire yesterday just looked like he didn't even know what he was doing. He didn't look like he was even prepared for that match. He just wasn't switched on. I mean, that first goal was just an absolute joke. But and then you get back into it and they score what 30 seconds later. Yes. I don't know. Oh my God. I Part of me is like they should just go and get Antonio Conte or Zidane or someone like that. They should go and get. I mean, because this is what Newcastle are going to do. I mean, they're going to try and get the best out there. I don't think they're going to be able to land Conte. I think that's been put out there, but we need to do better. That's for sure. That's for sure. Do you have the flu jabs? I haven't had one for ages. the flu jab. I'm double vaxxed though, so that may not necessarily. It's not exactly the same thing, but for the winter months, I don't typically have the flu jabs. I think I could have had it last year, and I don't think I went um, to go get it. So yeah. Can you give any views on Moneybox and how you think they are performing, please? Performing as in what? Their performance or how they're doing as a provider? I mean, look, they're very, very good. They're very good for if you just want to start investing and you're trying to get yourself organized. I mean, being able to round up your transactions. I've got a friend who's used them to do that. And yeah, it adds up over a period of time without you even really realizing it, because that, 20, 30 odd P here and there, it does make a very, very big difference when you're just starting out investing. In terms of their performance, though, the performance of their funds, I can't really comment on that purely because I don't track their performance. But in terms of an offering, they're very, very good as an offering in terms of the ease of being able to use them, the way the app is set up, the roundups, like I've said. I mean, the roundups are it's a game changer, really, to be honest. It's really, really good. So yeah, and they are expensive. But then again, I say this often on the channel. It isn't all about cost. If you're the kind of person that just wants something very simple to invest in and to get going, not having to worry about what Vanguard fund or what Fidelity fund or what iShares fund you're going to choose. You don't want to do it as a DIY investor. Then they're perfect, and you may not necessarily feel a certain way about paying those fees for them to do that for you. That's completely fine. I mean, there are different kind of investors, right? If you're full blown DIY, then you will never look at people like Money Farm, Moneybox, Plum, Nutmeg, maybe even Wombat. You wouldn't look at those guys because you want to be able to do it yourself. You want control over it yourself. I think that there is a large number of people who are pure DIY investors, but I believe that there's an even bigger number of people who aren't, who just want to be able to, you know, send some money somewhere and let that person deal with it, because frankly, they've got too much on their plate to be bothered with, looking at um, funds and trying to select the right funds and researching ETFs. Some people just don't want to do that, and that's just the reality of life. But Money Farm are great. I mean, I used them for a period of time just to test them out when I did my review video last year. Really, really good. Like I said, I've got a friend who's used them, and the roundup feature, he loves it. So yeah, I think they're great. But in terms of their fund performance, I can't comment. But they're a very, very good brand. Hello from the west of Shrewsbury. You're not far. You're not far at all, mate. My portfolio is weighted towards commodities, considering EV, nuclear, wind, solar, etc. I think it's a fairly good bet. What asset class excites you the most? For me, oh, mate, listen, I absolutely am. So a lot of I'm thinking of actually doing a video on this, because it's how I'm going to position this. I want to be able to position it in the fairest way possible. So a lot of my money is actually invested in future world funds, which is basically all kind of like tech. So EVs in there, and all this kind of stuff. But one area that really does excite me is the genomics field. Genomics really does excite me, purely because of the implications that it has on medicine. I don't know. I think I've maybe mentioned it before. I was going to study medicine when I came back to the UK in '88, and yeah, one of my big ambitions was to be in medicine and hopefully try and do a little bit of work so that I could, you know, do some work around curing diseases and so on and so forth. And a lot of the work that is happening at the moment in genomics is specifically around that, around how they can cure, things like blindness in babies by simply rewriting part of the genome. It's very, very, very exciting stuff. This is the easiest way to invest in one of these is via the Kathy Woods ARC ETF. She's got an ETF that specifically looks at that. That really, really excites me. I haven't got any money in it just yet. I will allocate some money to it. But that really, really excites me, the genomics part, because that is, if health is wealth and we only get one life and people value their health a lot, anything in terms of technology that helps people be healthier, extend life, and saves lives is a game changer, absolute game changer. So that's what really excites me at the moment. Kirsten, hello, welcome, welcome. Facebook stock to the moon. You know what? Yeah. All right. So let me just. I'm going to bring up a different window. Actually, bear me 1 second. Because we might have a look at some charts. Actually, depending on what questions we get asked here. I do hold for Facebook, and obviously with the whistleblower and everything like that. Yeah. I think the stock went down. I think it was like maybe 15% roughly, um, which is fine. But long term, like I said in that video, I think long term, Facebook is still going to be a fantastic buy because, from a competition point of view, they have no competition, period. Like there is not a company, I mean, arguably TikTok, but not for the same reasons, not for the same things. So when you think about, Facebook as a company to actually invest in, yes, there is a threat that potentially if the Senate in the States um, don't get what they want, that they will push to break up Facebook. And I think that could be an issue because I mean I haven't delved much into their accounts or anything like that, but it would be interesting to see that if Facebook did get broken up, in what way it got broken up. So would they break off Instagram from Facebook, or where they just literally take WhatsApp? I mean, WhatsApp, what income do they generate from WhatsApp? I don't really know. I think the biggest drivers of revenue for them are Facebook and Instagram. So if they were to break them up, what revenue do they lose because Instagram is taken away from the group? That is what potentially could impact the share price. But how much by? I don't actually know. But it will be really, really interesting to see what happens moving forward if the Senate does decide to break up Facebook. I mean, but looking at the charts right now, let me just have a look at this very quickly. Where are we? I mean, let me go back out. So this was. Let me go back a week. So when did the whistleblower? Whistleblower happened. It's about a week, maybe 2 weeks ago. So where are we right now? With the 17th. So it would have been happened around about the 4th of October or so, right? So where are we at the minute on here? So 4th of October. Actually, I need to zoom into this. Actually, you get this. Yeah, so the share price at that point was, I mean, it's still down at the moment, to be fair, because it was $329.59. I mean, at the moment, the share price is 324. So, and if you look at it from let me just share this actually. Yeah, so hopefully you guys can be able to see that now. And let me just get rid of that comment right there. Let's see where we are. And yeah, so if you look at the previous high was actually here, which was at $378. So it's still got a way to climb, really, to be honest. But I mean, I think, look, these are long term positions, right? You're taking this out for the long term and you're holding this for the long term. So, hopefully it shouldn't make any difference that it's down right now, momentarily. Yeah, as a long term play, this is going to be great. But like I said, it's going to be a question of will the SEC actually break up the business? And if they do, what revenue does Instagram contribute to the overall financial picture for Facebook? We don't know that right now. So that's going to be a risk potentially. But I think if you're holding it at the minute, I don't think there's any reason to panic. Stocks will always go up and down, especially when there's bad press and bad news. What happens from here on out is going to be the important piece of, how do Facebook react first and foremost? Do they decide to do something about addressing each of the points that the whistleblower has leveled at them? And look, I use Instagram. So I'm a prime example of. I mean, part of me was happy that it happened, because you try speaking to someone at Instagram or Facebook when something goes wrong with your account. It's impossible. You can't. I've had my Instagram account cloned 4 times now. Can't get to speak to a soul. Even though, and you go through their processes and you say, look, someone's impersonating me. So, and it's not like they haven't got the technology or the records to be able to show, right, this account has been around since 2017 or whatever, and it's got all of this content, and this new account was created 4 days ago and has populated the entire account with 400 odd posts within 24 hours. They can look at all of this data, but do they choose to do that? No. And the reality is, and this is one of the things that worries me, and the reason why I stepped away from Instagram a little bit was I actually had people message me. I had one person message me and who was actually, he had a go at me and said, "I thought you were a really nice guy. I sent you some money, and now you just gone, really quiet on me." And I'm like, I would never, ever, ever ask you to send me money or send money somewhere to invest in anything. I wouldn't do that. And in the end, this person sent this scam account £2,000. Now, from my point of view, do I have responsibility for that? Yes and no. No, because unfortunately, if the person had watched or listened to the podcast, you would know that I'm based here in the UK. If you follow my Instagram, you would have known days before that I was screaming at the top of my lungs with stories like, please be careful. Do not send money to any accounts who are contacting you under the guise that it's me, asking you to send money elsewhere. That's not my fault for you sending £2,000 to somebody. But at the same time, Instagram don't have any protective mechanisms, and they weren't willing to do anything about it in order to be able to protect people who are being scammed because they're impersonating me because they found my YouTube channel and their Instagram and they know that there's a bit of a following here. It's really unfortunate. So whilst the whole whistleblower saga is unfortunate, I think it's needed because the way that business is run is an absolute shambles from a dealing with them point of view. It is really bad. And one of the things the whistleblower said was that they're aware that there are issues, but it's almost like they don't want to open Pandora's box because they know the minute they open up a department to take or to look at something, there's going to be so much more that comes to light. And these guys are generating so much money. They have the money to invest, to make that better, to make the user experience better for creators like myself. But they don't want to because profit, ultimately. And this is where it's juxtaposition. You want a CEO that's all about profits if you're holding, stocks in a business. But at the same time, there is a more obligation to make sure that your platform is safe on all levels. Yeah, so Kirsten's saying it's pixelated for you guys. I need to sort this out. It's really frustrating. It really is. And I might have to have a look and see how I can actually stream it elsewhere. Actually, do me a favor, guys. I'm going to switch really quickly, and let me just get rid of this. Can you tell me if this is worse than what it was before? So is this what you're seeing right now worse than what it was before, or is it around about the same? Because I can see it on the screen here, and I can't really tell the difference because I've got it minimized. So please let me know. But I need to get this addressed because it's an issue. It's a problem. Thank you. Yeah, a couple of people are saying it's pixelated. And people are saying the audio is out of sync as well, which it shouldn't be out of sync. Because the connection on the Strength and Wi-Fi is telling me here that I've got a good connection, excellent connection, in fact, here. Anyway, we'll press on. Let me know if... Okay, so people are saying it's a little bit worse. Same for you. Poor quality. Zoomed out is slightly better. Okay, good to know. It's fine. Worse. Audio is fine. Audio is spot on for me. Okay, so let me just revert back to where we were before. I might have to change the streaming platform that I'm using and test a few out. a few different ones out. So apologies, but I have sent them a message. I was on a chat with them just before I went live. So hopefully they're going to come back with some kind of suggestion of what can be done for this. But let's just crack on and see where we are. Sorry, guys, I'm just trying to find where I was with the questions. Okay, here we go. If you have, say, 30,000 in your account and you have option of using it, do your masters versus using the money to establish your own business, what will you go for? Oh, that's a tough one, mate. That's a tough one. What's the masters in? Is it in a? Is the masters going to be in a subject that will allow you to move into a highly paid job? Because if you're going to spend 30K on a masters, if you can, get your masters and you can walk into a job where you're able to earn, maybe 50, 60K, then I would say that's a really good investment. Establishing your own business, see, both of them have risk. And look, it's sexy now to be entrepreneurial, to have your own business, but trust me, mate, it's not. It's hard. It's very, 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 very hard running your own business. It really, really is. And a lot of businesses fail within the first year. So 30K into a business is going to give you a little bit of runway. It's going to give you a little bit of cash flow, but you really need to have a solid business plan before you get going, or even start to even consider putting your 30K into it, really, in my honest opinion. Like I said, it's very, very hard. It is really, 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 really hard running a business. But then the rewards can be really, really good. So the question will be, is it a business that you know? Is it a business that is going to utilize a skill or a talent that you already have? Is it something that you are versed in? Or is it something that you're going to have to potentially learn new skills for? I would argue that you're going to have higher risk if you're going to go into a business where you have to learn new skills, because then it's not just about your skills of being able to run a business. It's going to be your skills of being able to learn on the job, run a business, and also then be able to market your services or your product at the same time. Another key factor that is worthwhile bearing in mind when you're looking at your own business is your network. It's impossible to do this all by yourself and on your own. I'm realizing that pretty much as we speak, really, that I need to start investing more money to basically help with things that I have been doing on my own at the moment that I'm okay at, but really it's not my area of expertise. That costs money, that costs investment, and you've got to be willing to put your money into that. So business is great. The rewards for business are absolutely fantastic. I think the big question you have to ask yourself is this, is that, are you building a lifestyle business, or are you building something that potentially, could be absolutely huge and you could sell on in the future? And, building a lifestyle business, there's nothing wrong with that. There is absolutely nothing wrong with building a lifestyle business that basically allows you to just pay your bills and allows you to have a really nice life. But if people are going into business under the assumption that they're going to build a business that is going to be a legacy that they're going to be able to sell for billions and millions of pounds, then that's a completely different skill set of its own. And that takes very intentional, meticulous planning and diligence in order to be able to do that. It's not easy. I know that on social media, you hear about entrepreneurs selling their business for 2 million, 4 million, 5 million. I've worked with those people. And the first thing that those people will tell you is it's hard. It's really fucking hard. And that business becomes their life. I mean, you think, the business is your life as a lifestyle business. Trust me, it's your life when you've got, the idea that you want to sell it. It's all about scaling at that point. It's all about growing the business and investing heavily into it. It's a different ball game. So it really depends on what your masters is, mate, to be honest. And ultimately, you've got to ask yourself a question. Will the masters allow you to walk into a job if that's what you want and have a career in a or for companies? Or equally, can you use your masters as part of the business? But either way, that's a question that you need to ask yourself. And I think you have to you've got to answer it dispassionately without the noise of, oh my god, if I build a business and I could be making this and making that. I mean, so many people think about business and they look at business owners as if they're these lucky people who have just employed people and they can swan off on boats and on holidays and do hardly any work, and it feels like this business is a passive income stream. A business is rarely a passive income stream unless you're able to fully delegate it, and that takes the business to get to a certain size. So those are questions to ask yourself, mate. We could talk about this all day long, like literally. The podcast a couple of weeks ago, I had a guy called True Powell on. There's a video of him on the channel. It's worthwhile actually watching that video, mate. It's 48 minutes long because it was the podcast conversation. I did the audio visual thing, but he is a multi-award winning entrepreneur. He has multiple businesses and he's very, 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 very successful. Really humble guy, but he will tell you it's hard. It's really, really hard. So maybe watch that, but I hope that helps, mate. It's not maybe a direct answer, but it is a little bit of an answer nonetheless. Right. Okay. So let's see where I am. Andy, mate, this is really, really good. Thank you to you and Chris' effort in assisting me to continue investing after cashing out the Eureka and with Invest Engine now. Oh, good. All right. Okay. Very, very nice. Okay. Good. Yeah. So, okay. So I thought you were going to go with Moneybox, mate. This is really, really good to hear. Actually, that you've gone with Invest Engine, because yeah, I mean it's really, really low cost. With Moneybox, you would have paid a little bit more, but yeah, they are low cost over at Invest Engine, and you can replicate what we've got. Like not 100%, but you can get an approximation of what we had. I mean, I have to say, thank you as well because I know that you had the whole issues with money coming over. And like I said, we are going through the direct authorization thing at the moment, which is going to take 6 months. But in the long run, it's going to be so much better. I'm thankful actually because for everyone who invested with us, I think there wasn't anyone that was down. So we were able to deliver um, cash out those investments again for people having lost no money at all. And actually, I think a lot of people actually cashed out in profit as well. It does give testament to the invest side and the invest proposition that we currently have. And we'll continue with that in 6 months' time. But in the meantime, we've got a lot of stuff. Well, we've got a couple of things that we think will be game changers for savers as well. I can't say much more than that, but the direct authorization is going to help us massively with being able to market that because it will be nobody's doing what we're thinking of doing at this point in time, and it's very, very exciting at this point at this moment. We're just going through all of the due diligence, asking the questions. We're talking to the FCA quite a bit at the moment around what their views are on what we're proposing to basically do. So we're waiting feedback for them on that. But it will basically be because at the moment, most people are going from either never been invested before to investing straight away and using a vehicle like Eureka or Vanguard or Orca or whoever, Moneybox or the providers that we always talk about. And it's a massive jump. If you've never invested, you're going straight there. And most of the time, people are investing because interest rates are so low. So what we thought is, well, actually, what we're asking people to do is we're asking people to take 4 steps when there's maybe 3 steps before that. But what can we do to get them on that first step, which is actually saving, and then being able to take the remaining 2 steps to step 4 into investing. So we're building something at the moment which is going to fill that gap quite nicely. and make savings more realistic. Let's put it that way, and more rewarding than it has been for years. And I can't say much more than that. But it's very, 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 very exciting. And we're just waiting for a little bit of feedback from regulators and doing a little bit of due diligence to make sure that, because it almost feels like nobody's doing this. And we're asking, well, why? Because it seems obvious that this should be something that is on the market and nobody's doing it. So we're thinking, okay, have we missed something? So we're going through all of that at the moment. And we thought, because we're going through direct authorization with the FCA, we're going to bring the regulator into the conversations very, very early so they can tell us, look, we would like this or we don't like this. If you're going to do this, we're going to require that you do X, Y, Z. It's very, very exciting. But you'll hear more once we have more to announce on that topic. I can't really say too much. I will get Chris on a live at some point as well, because I spoke with him on Friday. We have a meeting every Friday at 1:30 p.m. in the afternoon where we all get together and talk about what's going on and what the plans are and so on and so forth. So we mentioned on Friday that he needs to come on and we can talk about what we've got planned, but that will probably be in a few weeks' time. But I appreciate you massively, mate, because you really did show us alongside other people and faith in what we're doing here, so thank you. This isn't a complete question. What's your thoughts? What's my thoughts on, let me just have a look and see if I haven't missed anything, Jack. 1 second. Just going back up the chat. I can't see did you have a comment before that, Jack? Let me know. Yeah, I'll tell you what, Dubai was hot. It was in the 30s. And I like hot weather and everything like that, but sometimes it's just way, I'm comfortable around about maybe 25, 26 max. When you get into the 30s, 32, it's a bit much. So I can't really sit in the sun for that long. But it was nice to be out there and just be able to relax a little bit and also do a little bit of work. What are your thoughts on Dave Ramsey and his general principles? For example, hates debt and credit cards and believes mutual funds are best investments. Really good question, mate. Debt is bad. You shouldn't really. Debt is a massive drain on income. So where you can avoid debt, I mean, obviously, aside from things like mortgages, because with a mortgage debt, you're exchanging that debt for a property that is going to hopefully appreciate in value over time. So it's good debt, not bad debt. But yeah, debt, credit cards, overdrafts, personal loans, those kind of things, bad debt. Mate, I spent years and years and years in those things, and I don't have any debt at all at the moment. I've got a small mortgage. That is it. I don't owe any credit cards. I have no personal loans. I have no car finance. I have no overdrafts. I have nothing at all. And that gives you a sense of peace knowing that you haven't got to find certain financial commitments every single month. It really, really does. So I will agree with him on that principle around debt. Credit cards, absolutely. If you're using credit cards in the right way, though, that's fine. If you're using credit cards on a monthly basis and you're simply paying it off, using it for cash back, using it to accumulate air miles, those kind of things, that's absolutely fine. Credit cards are bad when it comes to the fact that you're using the credit card and making the minimum payment. That's what the banks want you to do. That's how the banks make their money. If you're in that kind of situation, you need to really try and work on how you actually get out of it. That is hard. That is harder than said. I know that because I spent years in credit card debt and overdraft debt. And you have to have a plan specifically for that. Mutual funds are good. They are a good way of investing. I mean, a mutual fund is all about collecting. It's investing as a collective. So you're investing in a pool of companies all under one banner. So mutual funds, index funds, ETFs, they're under the same classification, really. You can get them low cost. You get mass diversification across the different companies that you're going to be invested in. So yeah, it is a very, very good approach. Definitely. I will say though, Dave Ramsey is very kind of he is quite old school though. He really, really is. He's very, very old school, but still valid views. So this is a Nigerian name, I believe. What's up, P? Just a quick one about this Hyperfund. What do you think, Ponzi or not? I've not had a look at them, mate. I don't. I've not had a look at them at all. Um, Hyperfund. You're not the first person who's asked me about these guys. Let's have a little cursory search right now. Okay, so they're looking at DeFi. They're looking at hyper. Okay, so they got the hyper ecosystem, Hyperfund. Constructed a DeFi ecosystem that will provide a completely decentralized financial infrastructure for all digital currency users. Hyperfund will devote itself to developing quality blockchain products, lead the strategic direction of fintech, and aims to make more contributions to the blockchain industry. See, I like the idea and the whole concept behind DeFi. I get that. So they're into that, but I'm not really seeing what is their actual offering. So I know they've got Hyperpay, Hyperpin, HyperBC, which is a blockchain encrypted bank for the future. HyperTalk, Hypermining, Hypernews. I can't see what their public offering is though. So what is being offered to people um, as a product to invest in? That's what I don't see right now. And this is just from doing a cursory search. I haven't shared this with you guys actually. Just let me just share this. Hopefully you'll be able to see what I'm seeing. So yeah, I mean, I can't see what their product is essentially. I mean, if we go into the DeFi thing here, so this is the bit that I've just read out here. They've got a token. Yeah, but what's the offering? I don't get what the offering is. I mean, I can't say whether it's legit or not. Just by doing a little cursory search here, I would need to dig to it a little bit more just to find out. Well, what exactly are they actually offering? But I do believe that the DeFi space is going to be huge. It really, really is. I firmly do believe that. I think a lot of the technology that's being developed on the blockchain right now will change finance forever. And unfortunately, it is the change that is going to be coming along that banks and institutions, investment houses are going to change because DeFi, if you're able to stake your money, get a personal loan without having to go through a bank and credit scores and all this nonsense, right? Where you could literally just get it done in seconds on the blockchain. That is revolutionary. And that is going to put a lot of that's going to put a lot of banks and investment houses out of business. I mean, maybe not all of them, because there is an argument to say that you're still going to need the physical presence of an institution for a lot of this to work long term. But it is going to put a lot of people out of business. It is going to be a threat, and it is a threat to a lot of financial industry companies. And that's what they're really kind of afraid of. So I like the DeFi space. It really, really does excite me. The possibilities are absolutely huge. And I've said this before, when you look at the blockchain specifically and what that's all about, there are applications for the blockchain that we don't even know about right now. I mean, look at NFTs. NFTs, they've been around for a while, but this year was when people really realized that, hold up a minute, this could really be something. It's the same. I believe that that's the same for other things that we don't even know of at this point in time. This is a really, really exciting time in terms of technology, and yeah, it's hard to give a thought on Hyperfund without really digging deeper into it. But I will just say that DeFi does excite me. They're talking about working in DeFi space. This isn't me saying because they've got DeFi on their website that it's pure or legit. I'm not at all. But I'm just saying that DeFi really does excite me, and it's going to be groundbreaking, I think. Okay, here we go. Have you? Right, I've noticed nothing but after a sudden big rise in one day. Have you looked at it before? I then invest in a good company whose shares from the constant rise list, put it in a stop loss. Okay, I think I kind of understand what you're saying here, but I'm not really 100% sure on what you're trying to say. So basically, I would not invest in the company purely because it's on like the top 10 movies of one day. I don't do that. I don't think it's a prudent approach. So if you're investing in a company and it's an existing company, the fundamentals around the business is what I look at. So what do they do? What do they sell? What service do they provide? Do they have a good customer base? Are they making money? Are they in profit? Do they have a strong balance sheet? Do they have a good control over their cash flows? Do they have an advantage, a competitive advantage in the area that they're in? I'm looking at all of those things over and above. Right, they rose by 10% today. I mean, what you're doing is you're essentially trading. So trading and investing are two different things. So if you're taking a position based on a little bit of news or a little bit of technical analysis around a stock shooting up, and you think that there's another 15% or 20% move, and you're going in and then putting a stop loss, that's not investing, that's trading. So those two things are very, very different. I don't trade, I invest, which is more about the long term position. It's looking at the fundamental analysis around the business. That's how I invest. I don't trade. What you're doing there is basically trading. So, from what you're describing there, that's not something that I would do because I've got better things in my day than looking at technical analysis charts to try and figure out which company is going to be doing a 10 or 15% on any given day. I don't have time for that. I've got other things to do. So it's not my approach personally. There's nothing wrong with it if you've got the time and you've got the know-how to do it, but you need the know-how to be able to do it. You need to be able to dedicate the time to it as well. Pete, just to mention, it's good to see you. You made me do a 180 on my approach and where my life comes from. Thanks again. Oh, cheers, mate. I really do appreciate that. Thank you. Yeah, I do appreciate that. These kind of comments really do. They make it all worthwhile, particularly when it gets really, really difficult and really, really tough. And to be honest, I'm going through a little bit of a tough patch at the moment, trying to decide where everything is. This year's been an absolute roller coaster. We started this year just with a bang. Like January was nuts. February was nuts. March was absolutely nuts as well. And then through the summer, we had a little bit of a consistent kind of like spell. And ever since like maybe like June-ish or so, we've seen things trail off a little bit as obviously lockdown and all that kind of stuff started to ease. And at the moment, the channel is on at a lower point than it has been. Well, since I started the channel, really, to be honest. But like things like investing in the stock market, it is peaks and troughs. So what I'm trying to figure out right now is, how do I get out of the trough? How do I get out of the valley and start to get the channel, back on trajectory upwards again? So these kind of comments really do make it worthwhile because I'm kind of wrangling, scratching my head, thinking, right, what do I need to do and all this kind of stuff, and what are the plans moving forward? This makes it all worthwhile because at the end of the day, this all started because I wanted to be able to have conversations that I wish someone had with me when I was 20, 25, just getting into work and earning money. That's what this channel is all about. That's why I call it Conversation of Money, so that people understand that we're going to be talking about money. And I don't like to sugarcoat things. I always be honest and always give my view. Yeah, it's not always a popular view, but if it's impacted you positively, that's all that matters, mate. So thank you. What are my thoughts on Neo stock? I haven't looked at Neo for a long time, actually, to be fair, although I do have a little bit of Neo. I think long term, because of the way the Neo stock, Neo is being backed by the Chinese government, I think long term they're going to be okay. I know that they have had a little bit of a tough run with share price. So I've got my Neo stock within the Stake app at this point in time, and it's down. I think it's down by, let me just have a look. I haven't checked it for like maybe 2-3 months. But the last time I checked, I knew that it was down. So actually, no, it's up. My Neo stock is up 3.94% at this point in time. And if I look at the charts for this, So when was their big peak? So what was that? Where was this? This is in December. So we're talking, 27th of December 2020. So last year it was at $58.93. Then we had this massive red kind of like candlestick here, which at the top was 65. But we're looking at this bottom one here, so 56. And now we're down to kind of like here, so 37. So if you take that top where it is right now and you look at where it is, well, where it was then on the 27th of December and where it is right now, you could argue that actually for one the top there is probably what, 20 odd dollars in there, which is still a good amount of growth. But ultimately, with Neo, they do have massive, massive plans, and they are going to be a big competitor to Tesla in the Chinese market for sure. There is no doubt about that. They're backed by the Chinese government, absolutely. And China is on a big push from a clean, green point of view, because that's one of their big things. And if you think about what the Chinese government kind of want to do, I was reading a paper a few months ago. The whole reason why there was speculation that the whole reason why they allowed Tesla to have the Gigafactory, and this is a really, really big deal, right? They do not allow foreign companies to set up shop in China. The reason why they allowed Tesla to do that was because they see themselves in the future being the hub for EV production. And by allowing Tesla to come in, what happens? They have Tesla employ Chinese people. They upskill the Chinese people, and then they can then take that skill and apply it into products of their own, like Xpeng, like Neo, right? And from there, what they want to do is they want to be the EV manufacturer that will supply to most of the world. Essentially, that was what the paper was. Speculating was the reason why they allowed Tesla to set up shop in China. And that, to be honest, for me, isn't too far fetched. The Chinese are very, 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 very ambitious, and they do want to be leading the world in pretty much everything. I mean, just look at the news this week. There was, I was reading something, I think it was on like Thursday or so. They tested the hypersonic missile, and we're talking about weapons of mass destruction here, but the technology, the Americans are looking at it thinking, we have no idea how they did this, and it wasn't anywhere on their radar. So the Chinese want to be the best. They want to be leading the way in pretty much everything. And unfortunately, the truth is this: regardless of how much America tries to fight it, they in the next 10 years will probably overtake America in terms of the world's biggest market and the most valuable market on the planet. That is technically what is going to happen. I mean, they've gone very, very quickly from, way, way down in the tables to what being the second biggest in the world right now. They are on the cusp of overtaking America. And, Neo stock long term, I think will do really, really well. I think that the biggest challenge that Neo has is that vertical integration of being able to produce the batteries and not having to outsource the work to produce components. That's where the biggest shift for Tesla has been over the last 12 months. Elon is a pro when it comes to supply chain, when it comes to engineering. If he cannot get somebody, or if he cannot pay someone to do it externally, or if he wants to pay someone to do it externally and that they don't want to work according to his timeline, he will bring it indoors, which is why now everything is virtually integrated in Tesla, which means that they can make more money on the cars because their cost is being brought down, because now they own the robots that build the cars, basically. And that's a really big key. At the moment, Neo don't necessarily have that. The factory that they are building their cars out of is subsidized by the Chinese government, and it's written within their contract that if the factory loses money, Neo has to foot the bill. So they would need to, from a financial standpoint, try and rectify that, try to make sure that they can get their supply chain as efficient as possible. But long term, they'll be great as long as they're able to do that. Hang on a second. Where was I? Okay, here we are. If you had five index or ETS funds to start with, what would you choose? There are so many out there. My approach would be to go global. Global ETFs or index funds would be my approach personally, purely because, yes, you want exposure to the US markets, Europe, UK, emerging markets as well. I would have global. So there are tons. If you're using Vanguard, they've got the global ETFs and they've got the global index funds as well. But if you're going to do any research, depending on who you're looking to use, look at some of the global stuff first and foremost. If you wanted to get a bit more geographical, so regional with your selection, then it's a no-brainer, obviously, to have a look at the S&P 500, that kind of stuff, because the S&P 500 is the top 500 companies in the world. So you're not going to go far wrong holding something with them. But I would definitely have a look at global just to diversify your risk a little bit more and get exposure to as many regions as you possibly can. But yeah, that would be my thought. Not a top five, but that would be where I would start, and that's really what I hold. Let me just give a shout out to Andy here for that super chat, mate. Really do appreciate it. Thank you very, very much. Oh, he's saying he's got to go. Was going to talk to Relic, but I'll be watching the recording instead. Yeah, cool. I'm not sure if Relic's going to come on. He still hasn't messaged me back just yet. I don't know if he's on holiday or something like that. He might be. But we will try and get him on just to talk about cryptocurrency and Bitcoin and stuff. But appreciate you, Andy. Thank you. Let's see where I am. Okay, there we go. Yeah, I mean, so ARC ETFs have been hard hit, but will bounce back sooner. Look, so this is the thing, right? So with Kathy, she did a. I'm going to do a video where I'm going to talk about. I'm not going to give away the topic at the moment, but there's a video that I'm planning for next week where I'm going to be featuring her specifically. So when you think about Kathy Woods and how she views things, all of her funds have a 5-year horizon. So that's what she's invested in. She's investing in things that she thinks over the next 5 years are going to start to make a difference or will have an upward trajectory. So yeah, they've been hit recently, but this is the thing. You have people like her who do really, really well as fund managers, phenomenal returns. And the minute the fund is down 5% or 2% or 3% or whatever it might be, it's like, oh my God, they've missed the boat. They're out of touch now. It's kind of like football, right? I say this being a United fan, but when everything is going great, you sing the praises of your team. When things aren't going quite right, of course, you're going to voice your displeasure with what's going on. The same thing applies in this world as well. They have been hard hit because of the selections and just generally market cycles. But long term for that fund, she's still staying by her conviction because she is investing in future technology. And future technology is where it's going to be at. The technology now that they're working on is going to shape the world for the future. It's like trying to go back in time and saying to yourself, okay, right, so we've got something called the internet right now. Do you want to be invested in that? And then being like, I don't think so. In hindsight, it is the biggest and the best thing since sliced bread. It's kind of exactly the same thing with some of the stuff that she's got her money invested in right now. She's invested mainly in future technologies that are going to change things, genomics, for example, because she does believe like this is going to change the world moving forward. But you're right, it will absolutely bounce back, but it takes time. All of this stuff is done methodically with research, and there's always a reason behind the way things are placed and where money goes. She was talking a lot about Tesla in one of the videos that I watched of her recently when she was doing a talk. Tesla's her biggest holding, 10%. Her closest, biggest exposure in her funds is 5%. I can't remember the name of the company, but Tesla is her biggest one. And she still holds firm that $3,000 is the price for Tesla in the next 5 years. So, if she is right, and she always, says that if we are right, She knows that she's going to make a lot of money. And, I think people like that, you have to admire them for putting that kind of conviction, because, she manages something like $85 billion or something like that. Talk about money. Like, yes, she's earning a lot of money because she's a hotshot fund manager, but also the responsibility and that sense of pressure she must feel, being responsible for $85 billion of other people's money that they're expecting her to do well on is absolutely huge. It is indeed, mate. And like, if everybody values health, that genomic stuff is unreal. It really, really is. I mean, if actually on let me see if I can find it. Find it. Yeah, there it is. So one of the only places where you can buy her ARC Genomics fund ETF is on eToro. So here it is right here. So at the moment it's 0.38% down. Really, that's it. That's what it's down by. But let's have a look at. I wonder. I might have to go elsewhere for this. Hang on. Let's have a look at these ARC. Which one was it? It was the G. ARC G. So these are the companies that she has in here. So how many companies does she have in here? Now, the great thing about Kathy is she will publish what she's doing every single day. If she buys something, you're going to find out. If she sells something, you're going to find out. She publishes this information every single day. So companies she's got Regeneron. So I don't know if you remember, but when Donald Trump had COVID, he got given a experimental COVID drug that was developed by Regeneron, essentially. So these guys are at the forefront of medical technology. She's got quite a bit open with them at the moment. So what she's got allocation wise, that's 2.27% in Regeneron. Where did it just go? There it is. Which represents, by the way, I said 85 billion, might have been 850 billion she manages. Worth, that's with a B. It's a lot of money, essentially, that she has here. She's invested in quite a few companies here. There's 30 pages. Hang on a second. No. There's 52 companies in there. 52 companies altogether that she's invested in, that she feels are going to be the companies that are going to develop new groundbreaking medical technology moving forward. Now, if you talk about diversification, we talk about managing risk, right? This is what you call diversification. She's got 52 companies here, but as you will see, Beverly Lights, for example, we don't know what they do. We can go into one of these and just have a look in a moment, but the weighting on this is 1.29%. So she's got her money spread across 52 companies, and these will be researched. So her top company in this list is Teladoc Health with a weighting of 7.91%. Then you've got Exact Sciences Corp, 5.32%. So this is diversification. She's decided how she's going to allocate the money into these companies based on research. So if we go into Teladoc, for example, I don't know whether she provides a breakdown of what they actually do. Yeah, she gives a description here, essentially, right? So you can tell, you can just have a little read through this and just find out what it is they're actually invested in. But, this is really exciting stuff. And you talk about the fund being down at the moment. Yeah, that's cool. It's fine if it's down at the moment. But she's investing money with the view that she will be sitting down with these companies to understand exactly what it is that they're invested in, what the applications are, how far they are down the road of FDA approval, all this kind of stuff. What does this actually cure? It's huge what these people are working on, and she's putting a lot of faith into it. And just look at that growth trajectory. I mean, seriously. I mean, all the way here up to here. And people often forget that sometimes, a fund could be down, but down from where? If you picked up, and I use Bitcoin as the example for the video on Tuesday, right? If you picked up Bitcoin in 2009 when it first traded at 0.08%, and you're sat on Bitcoin at say $40,000, right? And right, we're at 59,000 right now, right? On the cusp of about 60,000 right now, okay? But then let's just say it falls down from 59,000 and it goes down to 50 again. It's down, but it's down from when you entered at 0.08%. People talk about the fund being down. Yes, it's down from wherever it was yesterday or last week. But from the point when you entered, you're still up massively. And that's one thing that is really, really important to bear in mind when you're investing. Like a negative day or negative performance doesn't necessarily mean that it's a bad thing. It means you've got to take stock of it in relation to when you actually went into the investment yourself. So if I bought Bitcoin at 1,500 and I'm up at 40,000, I'm still in the profit, regardless of whether it goes to 60 or comes down to 30. I got it at 1,500. So what difference does it make to me? It's psychological, a lot of this stuff. So let's have a look. What are the best investments for people in their early 20s with little or no experience? If you're in your early 20s, I would strongly suggest that you have a look at investing in, try and get a basket of investments. What I mean by that is go and buy like an index fund or an ETF or something like that, maybe a global ETF or something, put a bit of money into that. If you so wish to go and have a look at some individual stocks, then go and pick up maybe some of the dividend aristocrats, companies like Coca-Cola or Facebook or Amazon, Tesla. Well, I say Tesla, but Tesla's still very, very volatile, but because of the outlook of what they're trying to do, quite large. But companies like Amazon, Facebook, Coca-Cola, Procter and Gamble, those kind of companies, big companies, you're likely not going to have any issues with them at all, because those kind of companies disappearing off the face of the earth, it's, if the world ends, yes, a meteor is going to hit the planet, yes. But under normal circumstances, day-to-day life, there's people like Coca-Cola. People are still drinking Coca-Cola all day long, right? People are still buying food, still buying drink all day long. People will still be shopping on Amazon because things are turning digital now. People will still want to connect on social media because it's all part of our life. It's ingrained in us now. We have to be connected online. So you want to be looking at companies that are integral to our day-to-day life if you so want to go and buy some individual stocks. So companies specifically. Start with those companies because they'll give you a strong foundation to build upon. Then you can start having a look at maybe some more speculative businesses that might be new, like, I don't know, Neo would be one of them, for example, or what they called, I can't remember the name of the SPAC for Lucid now. It will come to me a bit later on, but you can look at some more speculative stuff after you've got the big foundational companies behind you. Hi, love your education. I want to get my first credit card to start building credit. Just a quick intro to how they work. Once a limit of £500 EG has been paid off, is the card done? All right, okay, good question, Liam. No, it's not. So with a credit card is essentially an ongoing facility, right? So you can, if you get a credit card of a £500 limit, it means at any given time you can spend £500. If you use the full £500 and you pay it off, that £500 will always be available to you until your card expires. So on the card, you'll have an expiry date on the card. So let's just say you get out a credit card today, and let's just say, well, we're in October right now. They may give it to you for 3 years. So the expiry date on it would be October 2025. It means that you can use that card up until October 2025. So if you have a £500 limit and you pay off the £500 every single month, or whatever you use every single month, you can continue to use it until October 2025 when the card expires. They will probably just renew it for you anyway. Really, one big piece of advice for you, if you can, mate, just try Try not to use it unless you absolutely need to. But if you are looking to build your credit, the best thing you could do is maybe, and I don't know whether you're a student or whether you're working or anything like that, but allocate a certain amount. So let's just say it's £50 a month. Spend £50 or £100 on it a month, pay it off straight away, and just continue to do that. And just do that every single month. Do it for 6 months to a year. And trust me, your credit will be stellar because it will demonstrate that you're able to use a credit facility and pay it off every single month. Try not to just pay off the minimum payment. That it will still help boost your credit, but it also does damage as well. So try to make sure that you can pay it off in full. That's the best thing you could do to help build up your credit the fastest. Yeah, no, this is a really good point here. If you can, so I mentioned obviously buying, an index fund or an ETF or something like that, right? But yeah, if you can pay monthly into it, so every month, if it's 50 quid or 20 quid or whatever it is you can afford, you can just pay into it on a monthly basis. Just get into the routine, the habit, and the habit is the most important thing here because you may just be starting out. I don't know how much you have, but obviously the amount that you're going to invest or put into it every single month will be relative to your earnings or relative to your disposable income, right? But the important thing is the habit, because even if you're, saving 20%, and let's just say that is, I don't know, 1% of what you earn on a monthly basis, or 10% of your disposable income, right? That 10% will get bigger as you earn more money and you have more disposable income. So focus on the habit of just investing every single month. Focus on just getting that going all the time. But just do a direct debit or a standing, well, do a direct debit into it and just leave it be. But pound cost averaging will be the best way to really get advantage of all of the peaks and troughs that you're going to get in the market. Okay, so where are we? Regarding Facebook, my mum's get banned for 30 days, right, left, and centre for risky. Yes, I see violence of racism, etc. weekly. Get away with it, mate. It's very, very true. It really, really is. I mean, TikTok's even worse for that as well. It's really, really bad. I mean, like TikTok. People said to me I should go on TikTok, and I'm just like, I get the idea of TikTok, but it's very quick, fast-paced content, right? And a lot of the people who are on TikTok who put a lot of financial stuff out there, Jesus Christ. But, all I ever see when I get on TikTok is just women prancing around. I'm just like, is this really? Like, really? Like, it's crazy, mate. It really, really is. And some of the stuff I've seen on there is just horrendous. I just wonder how. Who knows? There you go. Very controversial. Yeah, I'm just seeing some of the comments on here. I think different people get different qualities, I guess. Some people are saying it's fine. Some people are saying it's pixelated. Some people are saying it's okay-ish. So, but I will have a chat with VStream and hopefully try and get this all fixed properly for you guys. So. Is an index fund like the S&P 500 a good long-term investment for a beginner who has no knowledge about stock market? Yes, yes, and yes. It will be a great investment for you. I mean, look, like I said, it's the top 500 companies in the world. So you just need to have a look at the list of companies that are in the S&P 500. Let me just see if I can find a list right now. I can just show you. So this is just using Wikipedia, by the way, and the 500 companies, it gets refreshed and changed a lot of the time. Now, I actually did a video where I spoke about this company here. So 3M. Most people have probably never ever heard of 3M as a business, but they are huge. They have, I can't remember how many patents they have now, but it's in the thousands, and I mean the hundreds of thousands of patents. So they make post-it notes. They make so many products. They are a massive, 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 massive company. So what you're doing is you're buying shares of this business that has so many products globally that they're turning over billions every single year, paying profits, and really, really making good money, and they have good control over, their cash flow as well. Activision, you're going to buy some of that. So this is a list of all of the business that are in the S&P 500. So you got Google there, you got Amazon, some of the names you will recognize: American Tower, Amgen, Atham, a lot of companies, AT&T, Autodesk. So these businesses have been around for a very, very long time. BlackRock, by the way, who is also a fund manager, they are one of the largest companies in the world. I think they manage something like $16 trillion or something like that. These are very, 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 very big companies. So if you're just a beginner, this is a very, very good place for you to start. The only caveat that I would say, and I say this all the time, is that these are American businesses. So essentially, if anything were to happen to the American economy, right? So for example, the whole debacle when it comes to them increasing the debt limit. I mean, they had the deadline of tomorrow morning. They've agreed in the Senate to temporarily fund the government up until December 3rd. If they get to December 3rd and they don't raise the debt ceiling anymore, then potentially the American government would default on all of their commitments, all of their loan repayments, all that kind of stuff. You would argue that that kind of event would impact the value of the S&P 500 because people will lose confidence in the United States. So you'll see a knock-on effect to the market specifically. How severe that will be, who knows? Nobody really knows. But I think the hope is that, this has never happened before. It's very, very unlikely that the Republicans will play that kind of hardball to the point that they would allow America to default on their commitments. The debt ceiling has been raised, 98 times or something like that in history. So this year isn't going to be any different whatsoever. But if it did happen, you could argue that if you have all your money in the S&P 500, which is a US market, which is a US set of companies, then you could potentially have a little bit of downside there. That's really the only risk that you have. But the Americans, being the Americans, they probably want anything. They won't allow anything to happen to their economy to that extent. So you can probably rest assured a little bit. But it's a great place to start. All right, there was a conversation about the whole master's question going on here, which I like. I'm just going to skip some of these and see if I can get... this is a good one, David. What's your views on AMC? Is the squeeze just a dream or is it a real deal? Listen, I think there's been a lot of hype, and I think the hype is now completely and utterly dead. Like, I'm going to go back and actually have a look at the chart because, and this is the thing, the power of the retail investor, the investing landscape has changed massively. And I get the whole point of people feeling as though they can have one over on the banks and the investment houses. But all through that saga, I said to myself, you feel like you're getting one over the investment houses, but you're not really. Because at the end of the day, platforms like Robinhood were selling the order flow books to the investment banks. So when everybody's betting against them and buying AMC to squeeze, guess what? The investment banks are getting the data of how many people have put money in against them, what positions they're holding. They're seeing all of that data. And all they basically do is they basically take a hedge position to ensure that actually, if they get to a scenario where this becomes unattainable, well, actually, this little hedge that we have on the side is going to pay out. And guess what? They've done it based on the fact that they've got all the order flow. They've got the orders from Robinhood because people are using Robinhood and it's free. This is how Robinhood makes money. So I think that the whole squeeze personally is dead. It's gone. It was a moment in time when, a lot of people, some people made a lot of money, um, which is great. But I don't think that we'll be in a territory where this is likely to happen again. I mean, I said it in one of the videos that I think there was no way that share price was going to get to the levels that they were talking about. I think they were talking about $200 or something like that a share, or something like that. I'm just opening the chart right now. Let me just go back out here. What was the high point? I think it was 60 or something like that. Yeah, so this is the chart here. Yeah, so I remember this because I actually had a little bit of money, and I think I got in. I went in. I was looking at all the news, thinking, I will put something in there purely because, like, yes, I work in the industry, and I was like, okay, I don't like the fact that they're shorting 125% of a company's like stock, like. Bankers are unscrupulous, and I know it because I've been around some of them for a while. Like, they break rules and do all this kind of stuff. So I put a little bit of money in, and I think I put money in, I think at around about here, which was about 26 or so. I remember when it got to here, I was like, now look, this is a little bit beyond my appetite right now. And I think I came out around about here or so. And people were saying, like, from here is going to shoot and it's going to go to $100, $120. And I was like, I don't see it happening, because even when you start looking at the volumes at that point, it was like the banks, they would have to cover their positions, which is what they were hoping for, but they never did. They never, ever, ever did. And I just don't think that it's going to go anywhere. I think AMC, for where they are, I mean, historically, this is where they've been, right? So around about the 27 mark. I think, the $40 where they are right now is probably the best it's going to get for a while. The world is just reopened. Cinemas are now back. So we may see, depending on how things come out in terms of the recovery. But then again, in America, they're still struggling with COVID. So I know they're trying to get back to normal as much as they can, but it's not plain sailing out there at the moment. So you may see that the share price goes up a little bit. If it gets to 50, I'll be very, very surprised. But if it trends down to around about 30 and sits between 20 and 30, I wouldn't be surprised about that either. But I think the squeeze is well and truly dead now. All right, let's see where we are. There's a good question. Is student loan considered a bad debt? No, it's not. A student loan will not have any impact at all on you getting a mortgage or anything like that. So student loan is not considered as a bad debt in my book. Absolutely not. It's not going to prevent you from getting anything that's going to be meaningful moving forward. So no. I've had to take out a secured loan as I can't pay off my credit cards. I'll add it to my mortgage in a couple of years. What you've done there is actually a very good way of actually getting out and managing it, because with credit cards, they're open ended, right? You have an expiry date, but what typically happens is they literally just give you a new card with a new expiry date, so it's open ended. So meaning there is no date in sight where it's going to essentially end. So putting it onto a personal loan, a secured loan, is a great way of being able. You say secured loan, which will mean that it's secured against something. If you've taken a personal loan, then it will be unsecured. A secured loan is your mortgage because it's secured against a property, an asset. So I don't know whether you meant to say unsecured loan like a personal loan. That's unsecured. That's a good way of dealing with it, because you'll have a term under which you're paying it back, so it will come to an end at some point. I think this is the same, but I think you added a little something to it. My mortgage still has about 20 years left. Is this the best thing to do? Yes, it can be. I mean, the main thing you need to consider here is that, your mortgage rate will be less than a personal loan. because obviously it's a mortgage, and then over 20 odd years you'll be paying less, so your monthly payments will be significantly less than what you're paying on the personal loan right now. But over the long term you're going to pay more interest. That's the only downside. Most people are happy with it because I'm a qualified mortgage advisor. I know that I have consolidated debt onto mortgages for many people, and they felt a sense of relief knowing that it's on the mortgage. They don't have to worry about it, and they've been able to reduce. I did one for one couple. I think their entire loan repayments was something like £800 or something like that a month. They had a lot of debt. In the end, we got it onto the mortgage, and it was something like an extra £120 a month. It was ridiculous. Saved them 600-700 quid a month, and that is life changing for a lot of people. So yeah, it can be a really good thing to do, but you're going to pay more interest over the long run. What do I think about Yearn Finance? I haven't heard of them, so I don't know. What do they do? Are they another channel? I don't know. I haven't heard of them. It's about 26K on 20 cards. Something. There's any other way? Yeah, I mean, so personal loans. What's the max for personal loans? It used to be 25K when I was in the bank. I think that's about the same. I think that was yeah. I think that's the max for personal loans. I think that is, but that's a lot to have on credit cards. And the thing is, I know someone was saying about a 0% balance transfer. It would be very, very rare for you to be able to get a balance transfer that is going to give you that 26K altogether. You might be able to get a balance transfer for a portion of it, but then you're still going to have a portion of it on interest. So you've probably done the right thing again onto a personal loan of some kind, so you can manage that payment over a period of time. But yeah, if you get that onto a mortgage, you're going to pay significantly less on a mortgage over the long term in terms of your monthly payments than on a personal loan, although you'll pay more interest, but your interest will be on whatever the interest rate is on a mortgage, which is likely going to be like 1 or 2% versus a personal loan that might be 5 or something like, well, 26K. You might be looking around about 5 or so. I don't know what the rates are now. I'm just speculating there. And I will say, by the way, it's not uncommon for people to have 26K on the credit cards. It's very, very easy to do. I've had a lot of friends who have done that. The couple that I was speaking about before in that example, where their payments were 600-700 quid a month, they had around about 40K's worth of debt altogether, credit card debt altogether. It's very, very easy to do. Really, really, really easy to do. And they had some other stuff as well. So it's good that you've actually taken a step to address it, because what tends to happen is people realize that all of a sudden, shit, I've got 26K's worth of debt now. And what they tend to do is then they just put their head in the sand and they just try to ignore it. And that's never healthy. So the fact that you've actually, been like, I'm going to deal with it, and you've actually decided on taking an action is a positive thing. You didn't bury your head in the sand and just hope it went away. That's the first step in dealing with anything. So that's really, really good. Can one hold all world in the same ISA portfolio? Yes, you can. Yes, you can. So you can have the VWRL and the S&P 500 in Vanguard. No problem at all. Under the same. You can do that. All right. I'm conscious of time. We're about an hour and a half in, so I may not get to all of these. I'm just going to see if I can speed through as many of them as I can. When investing for the long term, at what point do you cash out? Well, that depends on what your long term goal is. I'm investing for 20, 25 years. So I'm not going to cash out for 20, 25 years unless something substantially changes. It's really down to you, to be honest, which is why I always say to people that you need to have a goal and you need to understand what your goal is when you start. So long term, what is long term? 5 years is not long term. 8 years is midterm. Long term is anything 10 years plus. So if you invest in 10 years plus, you shouldn't be cashing out really until you get to your date, unless something substantial changes in the meantime, at which point you would cash in according to your plan. Remember, all of these investments they're not like uh, fixed contracts where you absolutely have to hold for that term. You don't. You've got flexibility. You've got the ability to do whatever you want. Whatever best suits you is what you should do. So if you feel as though, right, I need to cash out early, cash out early. There's nothing wrong with that at all. But the question is, have you met your objective? If you have, great. If you haven't, okay, why not? And it's just reviewing it and just making sure that you're always comfortable with what you decide to do. I paid my credit card payment through taking a loan with the bank. Thank goodness it's all paid. What would you advise on this? Look, if it's all paid now, Edna, then happy days. You know, you're free of it pretty much. Like people talk about debt, and I know that someone asked the David Ramsey question earlier. Debt is it can have a huge impact on well-being, people's mental health, and just general sense of well-being. Like I know that because I've been there. It's horrible. um, and it's so easy to get into there, and this is where people will leverage blame at the banks because they make it a little bit too easy sometimes. And you talk about the responsibilities that the banks and the providers have. Yeah, they do have a responsibility. They make it a little bit too easy and in the interest of making profits, but at the same time there is a responsibility to be held by people for being in debt. I had, when I was in debt, I knew what I was doing. I knew I had to pay it back, but I needed money. And a lot of the time it was desperation that gets people there. And we can start to dissect how in today's world, in the sixth or seventh richest country in the world, you have people in desperation because universal credits are being cut. Desperation that they have to then go into debt. Like, seriously, the sixth or seventh richest country in the world, and you have your citizens desperate financially that they have to go into debt. Like, it's really questionable around what it is and what society we live in and what's going on. But the crux of the matter is this: we don't get taught any of this stuff. We don't get taught how to manage any of this stuff when we are younger. If we were, it would be a completely different story. But we don't get taught any of this stuff. And therefore, it's easy to, just, oh, I need it right now, or, it's something I've got to do without really exploring all of the options. It's easy. I'll just go to the bank. They'll just give it to me. Because I remember you'll get a letter in the post. You're pre-approved for a loan. You're pre-approved for a credit card. And I'd look at it and be like, oh my God, so I can get 5K right now. I can get £5,000 right now if I just go down to my bank, walk into my bank. I can walk out with 5K approved and it will be in my account in 2 days. They make it way too easy. And that is wrong. But because we don't get taught how to deal with debt and how to deal with money in school, that's why I felt, oh my God, it's 5K. What could I do with that 5K? Not do anything tangible with it. I'll go clubbing with it, go drinking, go buy some nice clothes. And have a great time. Not take 5K to go and invest or do something else. No, for foolishness. And me and my mates, we used to do that all the time back in the day. We don't get taught it, but the fact that you've been able to, pay it all off, great, because a lot of people are struggling to do that. A lot of people struggle to do that. Never seen anyone doing it over 50s who do life events can now only try to restart. Okay. Never seen anyone do a video for the over 50s who, due to life events, can now only try to restart investing. Okay. I could probably do that. The reason why I haven't done that because I have my demographic for that age group is small. It's tiny. Like, it's extremely small. The majority of my demographic is between 24 and 35. That's about 60%. Then I've got so the biggest overall demographic is 18 to 44. That's 75% of my audience. So if I did a video on that, it would be very small of people that would actually watch it. But it's something that I can do because, I mean, life events, if you're in your 50s though, and this is where, and maybe it's not even the place for me to say, if you're in your 50s, your set of priorities and what you should be looking at will be very, 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 very different. And really, if you're in your 50s, looking to start investing or restart investing right now because of a life event, because there are so many other things that come into the picture at that age, you should be seeing professional help. Really, you should be, because there are so many things to consider. It's not like when you're 20 or in your 30s where it's like, oh, I'm earning money, and the only worry that you have is making as much money and accumulating money. At 50, you've got retirement, you've probably got potential care home fees that you've also got in the back of your mind. You may have family and grandchildren that you're thinking, I actually want to be able to help my grandkids with this. There are so many things: past pensions, properties, mortgages coming due. There are so many things that come to the table that they should be taken into consideration as the entire picture when it comes to investing, and not just investing alone, which is why they should really seek professional help. And yeah, I can do a video though. Maybe it's not for me to say that, but I could definitely do a video. But there's a lot more to be said than just investing when you're 20, 25, 30. There's a lot more to consider. Where are what source from, Alex? Are you talking about the charts? The charts are in eToro, by the way. So all of this stuff is in eToro. So I'm logged into my eToro account right now. So that's where I'm getting all of these charts from. Okay, listen. Let me just make this clear. Kathy is not coming onto my channel. All right. Okay. I wish she was. If she was, oh my God, it would be big time. If she was, she's not coming onto my channel. But basically, I'm going to be commenting on a recent meeting that she did where she was talking about a very specific topic. So I'm going to be covering a little bit of that in a video. Anyway, I'll put it out in the ether. If someone knows Kathy or knows how to get hold of her to come on the channel, that would be absolutely great. But yeah, she's not coming onto the channel, just to make that clear. It would be great if she was. Thoughts on credit cards to increase score rating? Yes, you can use it. All credit cards will increase your credit score rating if you use them correctly, that is. So again, it's all about just making sure that you're using it, paying off the full balance, and doing that over a 6 to 12 month period to increase your rating. That was it, CCIV. That was the Lucid company. Thanks for that, mate. What's your opinion on sector ETF like energy versus S&P index? So the S&P index, so the S&P will have a number of sectors in there. So, you're going to be widespread across consumables. You're going to be you're going to have a lot of exposure to consumables, tech. You're going to have so many industries within those 500 companies because they all work in different sectors. So you can't really compare an energy ETF with the S&P 500. You can't. It's not the same thing. It's apples and pears. If you're talking energy specifically, you're looking at a specific type of company. So you're looking at, many will argue Tesla. You're looking at BP. You're looking at Mobil, Exxon. You're looking at those kind of people, right? Or solar providers or wind turbine providers. You're looking at those kind of companies. The S&P 500 will have those kind of companies in it, plus a whole lot more. But if you're looking at a sector ETF like energy, and you're trying to compare it to the S&P 500 for investment purposes, I will argue that you're going to get better diversification in S&P 500, although the concentration that you'll get within the energy, if you have a good pick of companies in there that are doing some really tangible work, you may get better returns from the energy ETF than you would do on the S&P long term. But that will be heavily dependent on the companies that are in the energy ETF and what they're working on individually as businesses. Does my dad think I'm a huge disappointment? You know what? I don't know. I really, really don't know. My dad died in 2000 and five. I want to say 2005. And the last time I saw him was when I was 17, as he was actually, did he even come to the airport with me? I don't even think he came to the airport with me. I don't think he did. I think I saw him the day before I came back to the UK in 1988. 1998, sorry. That was the last time I saw him. So I didn't see him before he died. I didn't say goodbye to him before he died. I was over here. It happened out of the blue. So I don't know whether he thinks I'm disappointed. I'd hope he isn't. I hope he doesn't think that. He wanted me to be a doctor, but it just wasn't meant to be. Good question though. Hi, Pete, new watcher. Love your level headedness. Tuning in late, so may have missed it. But have you discussed Evergrande possibly going into default overnight? I haven't actually covered that. I mean, I did. I think I did a video where I maybe mentioned them and spoke a little bit about what was going on there. I'm surprised that the Chinese government hasn't pivoted and decided to bail them out. Um, the implications of them, if they do disappear overnight, it's a big, big, big implication for the Chinese economy. Now, when I spoke about it, I spoke about it in regards to would that mean for investors here in the UK. I don't think there will be any systemic risk at all because, I mean, I've worked for investment houses and discretionary fund managers before. And whenever we used to discuss investing in China in any of our asset allocation meetings or investment committee meetings, we always used to approach China with a lot of trepidation, purely because you were never really sure whether the numbers coming out of China were reliable, whether they were being fudged or not. So therefore, a lot of investment houses approach China very, very cautiously. And I just don't think that there's enough volume invested in Evergrande from developed world investment managers for there to be a huge systemic roll on effect to portfolio values or asset values in domestic terms, or even in terms of people hold it in the United States. The investment managers have been way, way, way too clever for that. And I think a lot of investment managers, because they're sitting down with these businesses and constantly analyzing. And this is the thing that maybe I don't explain well enough. And this is one of the things that, when you're investing, you really need to try and understand and take stock of. If you're a DIY investor, it's solely down to you to make those decisions. And a lot of the time, if you're getting your news from mates in the pub or videos trending online, the information that you're getting is it's like third, fourth, seventh hand, right? That information has already been acted upon. Investment houses get information before anybody. Anybody. So a lot of the big, big investment houses, BlackRock, the big names, Vanguard, the big names, they would have seen this coming a mile off. I was speaking to one of my friends 3 weeks ago, and we were talking about this specifically, and like, yeah, we sold them last year because we could tell that there was something wasn't quite right. Because when they invest in these companies, they just don't give them 100 million quid and be like, oh yeah, we'll see you in 2-3 years time. No, like they're sitting down with these guys and reviewing and trying to get updates like on a regular basis, 6 months, every year, like turning the tables upside down to find out what is going on with the business. Are you on track? Are you not? We heard this. What's going on? Looking for numbers. A lot of the time when a company invests a large, substantial amount of money in the business, they're taking seats on the board. So these investment houses, they would have seen this a mile off. A lot of them would have trimmed their exposure way, way before this. So in terms of impacts to UK, European, US portfolios, it might have a little bit of an impact, but most of that risk would have been mitigated by the good investment managers and fund houses way, way before any of this came to light, because they would have heard it and seen it coming a mile away. If nobody has asked about what do you think of it, there are other Chinese property developers in similar positions. What's the potential for contagion? Dare I say global recession? Yeah, Barry, I don't think there will be. It's not like the Lehman Brothers. It's not like that at all. Um, there isn't going to be, in my opinion, any risk of at all of a global recession or contagion as a result of the whole Evergrande thing. That's just my opinion. A lot of the fund managers, like I've already explained, were way too cute and way too intelligent for it. They would have seen this a mile away and trimmed their positions accordingly. That isn't to say that there may have been maybe a few greedy ones out there that didn't, but the good ones would have seen this coming a mile away and would have trimmed their position straight off the bat. So I don't think there's going to be any knock-on effect to a global recession at all, because it's not the same as the Lehman Brothers at all. What is an NFP? Give me the full meaning to that, mate. Where do you start if you want to be a financial advisor in the UK? Good question, mate. So depends on where you are right now. You need exams, really. You need exams. So there are two routes that you can go down. You go down the London Institute of Banking and Finance. You can do the level 4 qualification. You need level 4. The minimum is the minimum standard. So you can do that. That's relatively easy. Or you can go via the CII and you can do the exams called the ROs. The ROs are a little bit more tedious than the LIBF, the London Institute for Banking and Finance. That route is a lot more, in my opinion, a bit more practical, because it teaches you how to write suitability reports and actually, do that stuff that you will be doing as an advisor. The ROs don't do that. The ROs are more technical in their nature than practical. So you can go down those two routes. If you're not already in the industry, there are a handful of businesses. There's one I used to work with, actually, Open Work, who have academies. I can think of 3 straight off the top of my head. So, Michael, if you're following me on Instagram, message me on Instagram, and I can kind of point you in the right direction if you're not already in the industry, or if you want to go down the academy. The benefit of going via an academy is, if you go, for example, through the Open Work Academy, what they basically do is they take you in, they train you, and then what they then do is they help you set up your own practice as a financial advisor, essentially. So you get all of the mechanisms and the support and the infrastructure that you need to actually go out after your qualifications and actually be a financial advisor. And they help you along the way as well. So it's kind of like, it's like an apprenticeship, if you will, where they hold your hand and show you what to do and give you all the infrastructure that you need. But yeah, message you on Instagram. I can point you in the right way, in the right direction. Do you have a percentage rule on how you allocate your investments? I have 100% of what I save into index funds every month, but thinking of being a bit riskier. Well, it really depends on, number one, how long you're looking to invest for, and then it also depends on what level of risk you're looking to take, and able to take as well. So this is hard to answer straight off the bat without having a good conversation with you. And this is the kind of stuff that I do in coaching with people. So we try and sit down and talk about, okay, what's your goal? What's your investment time horizon? What risk are you willing and able to take? So what's the income like? What's your disposable income like? What's your emergency fund like? And then from there, we can plot a chart to say, okay, right, you're here within this risk parameters. You can either go left or right of where you are, right being higher, left being lower. You can go either way between that. This is where you want to go. So I have that for myself because I know what my goals and my investment time horizon is. It's hard to say for you, Chris, without really understanding what that looks like for you. This is where coaching will really hopefully be helpful for you, because we can then talk about that. But I do offer 3 30-minute consultations and stuff. So maybe you want to book one of those and see if I can actually help you make sense of that specifically. If you want to do that, you can go on to my website, conversationofmoney.com. You can book a discovery call with me there. Spencer. You say I can hold a VWRL and the S&P 500 in the same portfolio. I'm running with free trade. Someone told me it's best I don't because of exposure. I don't understand the exposure thing. So who told you that? So which one's the VWRL? The VWRL is the global one, isn't it? Get into Vanguard, one sec. It would be easy for you to do it if you just did it directly with Vanguard, but I understand if you're using free trade, because a lot of the good funds within free trade are behind a paywall. So it's not as easy as one hopes it would be. Right. Which one's the VWI? I think it's the no, that's that one. I'm just going to try and find it, and I'll answer your question in a minute. And I'll talk about the exposure as well. Okay. So this is the VWI. It's the FTSE All World ETF. Okay. So the exposure, right? So basically what they're saying is exposure is where is your money invested in regards to the sectors and the regions that you're invested in. So where is your money invested? How much of your money is invested in a certain thing? That's your exposure, right? Your investment into something. Now, I don't know what this person's talking about, but they're wrong. Well, they're right and they're wrong. They're wrong because this is an all-world FTSE. So this is invested from a global point of view. So if you go onto the portfolio data, these are all of the countries that you're invested in. So you got United States is the biggest bit of exposure that you're going to have. So this is exposure. All of this is exposure because that's where your money is invested. So the most amount of exposure that you have is the US, the United States. That is going to be true for every single global fund that you're going to invest in because the United States is the largest market on the planet. So you're always going to have large exposure or large portions of your money invested in the United States. Now, if you invest in the S&P 500, it's also going to be invested in the United States as well. So what they're basically saying is that really what you're going to end up doing is if you invest in this one, which is the VWRL and the S&P 500, you're going to have a lot of exposure to the United States, which is very, very true. However, the United States is the largest market on the planet. So really, that's where you want to be invested because they've got all the tech giants. They've got most of the big companies globally. Most of them are in the United States. So there is right in the fact that you will have a lot of exposure in the United States. The real question here is, are you okay with that or not? If you are, then by all means, go and put some money into the S&P 500. I would argue, though, that within this. So let's go into the overview here. This is invested in 3,758 companies, stocks, right? So I would hazard a guess to say that there will be a lot of the S&P 500 companies within this anyway. So are you doubling up? The only reason why you would invest in the S&P 500 potentially is because you want to have more exposure to that group of companies specifically. And you want to have a concentration towards that. That's one of the reasons why you would do it. So yeah, you would have a little bit of exposure. I was going to say that the person was wrong on one hand, but actually, because it does have a large amount of exposure within this portfolio data, where is it? As you can see here, yeah, you're gonna have a lot, but there is no alternative. Where else are you gonna go? Are you gonna go? Europe? I mean, you could go Europe if you wanted to, but there are a lot of European countries in here: UK, France, Germany, Switzerland. You've got European exposure in here as well. To be fair, I mean, the European exposure is 16.9% of this. Then you've got Pacific, which is 11.7%. Emerging markets, 10.6%. So if you wanted more exposure, for example, to Europe, then what you would be doing is you would be having a look at the European ETF specifically. So you'd come back out of here and you would go to, where is it? you would go here. So you might decide, actually, you know what, you want to have FTSE Developed Europe, which is this right here. Okay, so there will be 617 companies within Europe. When you go to portfolio data, you're going to find, well, this one's got the most exposure to the UK, but France, Switzerland, Germany, Netherlands, Sweden, Italy, Denmark, Spain, Finland, Belgium, Norway, Poland, Austria, Ireland. So you could argue that you might want more exposure to Europe. You could then go and pick this one, or pick any of the European countries or ETFs that are within this list here. You could go with the Germany all cap if you wanted to, which will be solely invested in Germany. You would probably want to have a good reason to buy Germany and just Germany alone. I mean, they are the biggest economy in Europe, but they have got their own challenges at the moment with party changes and so on and so forth. So you might want to go here. You might want to go the Europe excluding the UK. So this one will look very, very different to the one we just looked at. When you go portfolio data, you're going to have France as the largest holder here, but there is no UK in this. So you could do, that's a long-winded answer, but at the end of the day, you will need to decide where you feel you want your money to be invested. Do you really want to put all of your money into the United States and you feel confident that the States is the place to be? They are the largest market. They have got all the tech giants. Most of the companies that I've spoken about through here in the genomics range, they're all in the United States. Majority of them are in the United States. So is that the best place? If the answer to that is yes, then by all means, VWIL plus the S&P 500, put your money into that. If you're looking at it thinking, actually, you want to spread your risk a little bit more, get a little bit of diversification, then you may want to have a little bit of Europe. You might want to have a little bit of emerging markets as well. All right, we're coming up to 2 hours. Right, there aren't that many more on here. So let me just, I'm going to speed through the rest of them. Yeah, someone just mentioned it here. Yeah, so someone just followed in there. You're going to have the S&P 500 in there, but if you want specific exposure to that as well, that's fine. Cheers for this, Edna. Really good, thank you. You listen to people so long, you know the answer to some questions before even he answers. You know what? And that is the important thing. So, you know, the idea behind this channel is that, you know, you can answer these questions because you know the train of thought behind it. And that's how you know that you're starting to understand how things work. If you see a question you're like, actually, I think it's going to work like this, then you've learned something. That's the whole point of this, right? So that people can kind of have a little bit of what I've picked up over 16 years being in the industry and be like, oh, I understand how that works. So actually, this would be the answer to it. And I might be able to add a little bit of nuances here and there, but the fact that you get the overarching principle, win-win, win-win-win. Yes, if you haven't already, 43 on here. Let's get it up to 50 before we leave. That would be great. Or over 50. That would be fantastic. So I've already priced in the global economy. CCP refuses to bail out, and investment funds have already moved to more stable assets like SPY. Is this the reason for the weekly eighth power global? You know what? I don't know. It may well be. I don't know without actually having a look at it. I was looking at remortgaging earlier next year and borrowing more money. I've heard that rumors of interest rates increase by the end of the year. Is it best to apply for a mortgage now? Potentially, yes, Paul. I mean, I will be paying attention. So the Monetary Policy Committee at the Bank of England, they meet every single month. So I'll be paying particular attention to what their consensus is around the bank rate and whether they're going to keep it stable or not. I can't remember the date specifically, but if you Google it, Monetary Policy Committee meeting, Bank of England, it will give you the date. There will be news out on that day. I'd pay attention to it because what they will do is it will be very, very rare that they'll just change it, boom, just like that. They will signpost it. So, for example, if they meet this month and they say we're going to put up the rates, they're going to tell you when they're going to put up the rates. Now, potentially, that gives you a little bit of time to apply for a mortgage. but they're not going to put the rates up by like 1 or 2% straight off the bat. It will be very, very small increments. So at the moment, it might be something like 2.5 each time they increase the rates, because they don't want to introduce that shock to the system. But yeah, if you're looking at, remortgaging, pay attention to the NBC News when they meet, and then potentially start putting, doing a bit of research around mortgage rates and stuff like that as well, so that you can kind of get an idea of what you've got right now. And then you might just decide, push the button now, because they are saying that, interest rates will hit 4% by the end of the year. I think that would be a little bit detrimental if they did it that quickly, but who knows? All right, okay. I jumped one question here, so let me just get to this. What's your views on thematic investing and rebalancing your portfolio once a month through ETFs? Currently, I'm doing index funds, which was a long-term plan, but I want to get returns at a quicker pace. I think if you're trying to get returns at a quicker pace, mate, you're heading into potentially risky territory. Like you're not going to get quicker returns if you're investing. Like you're without taking huge amount of risk. Like people want quick returns. Nothing's quick when it comes to the stock market, particularly where we are right now and the environments where we are right now. There is no such thing as a quick return, mate. We're potentially looking at market correction, and you're talking about quicker returns. So thematic investing is great. There's nothing wrong with that. But rebalancing on a monthly basis, that's trading. That's not investing. That's trading. Like typically, most people will rebalance their portfolio every 6 months, every year. Rebalancing every single month is not investing. That's trading. You're chopping and changing your position. That is trading. And if you want to do trading, then you wouldn't be trading via ETFs, because that's not the right vehicle for you. You want something that's going to be more dynamic, that is going to be able to give you the ability to get in, get out, which will allow you to have the movements a lot quicker. If that's what you're looking for, rebalancing your portfolio on a monthly basis. Why? Because what happens if your portfolio is down? It's all very well and good if your portfolio is up when you're rebalancing and just trimming things off. What happens if your portfolio is down? So, if you're looking at, quicker returns, investing isn't for you, my friend. You need to be looking at trading. But trading is a completely different skill set. You can't control or you can't dictate what returns you get when you're investing. You just can't, because you don't control the markets. You don't control the news that comes out of these companies. You don't control the economy. Investing is all about taking calculated risks and being okay with it for a period of time that you define. And like I've said, you should not be investing unless you are investing for at least 3 years. And even 3 years is cutting it thin. 5 years really should be the minimum. And if you think 5 years isn't quick enough, then trading is where you need to be. All right, okay, this will be the last question. Where do you think is the best city to buy a house in England as a first-time buyer? Mate, there are probably 50,000 answers to that question. For some people, it's London. For some people, it's Birmingham. For some people, it's Liverpool. For some people, it's Manchester. If you're talking about property values and the potential for property growth, then you're probably talking, London. People will argue anywhere near the HS2. Will say that actually that's a great place to buy, based on HS2 being infrastructure led, and house prices will increase because of the commuter links. It really depends, mate. Where do you live? I mean, are you talking about this for an investment property or you to live in it? I mean, if you're going to be living in it, then you need to buy a place where you want to live and not necessarily the best place. London is very expensive, but obviously quite a buoyant market. So if you get a place in London, you're probably going to make a lot of money on your property if you hold it for long enough. That may not be necessarily the same in places like Birmingham, Liverpool, Manchester, not to the same degree anyway. So it really depends on where you live and what purpose you have for it as well. All right. Okay. Thank you guys. Appreciate it. This has been the longest one we've done so far, 2 hours. Sunday evening. It's now 11 o'clock. I appreciate you. Videos on Tuesday and Friday. We'll ask for your guys' help. Please do share the videos and stuff like that. like, comment. That will really, really help me. But yeah, appreciate it, guys. Whatever you're doing this week, make sure that you have a good one, whatever it is that you do. And I will see you on Tuesday.